And again, I encourage a lot of people to get, not only the young people, but people in general, just to get in some kind of networking group. Some of those groups could be just from a educational standpoint. A lot of them could be for profit, a group of people moving in the same direction. Very, very powerful. But I think sometimes we have this mentality now that we've got to do it. We got to do it by ourselves. No, I think I know myself, when I was in business by myself, it was quite difficult because, I've got to worry about every aspect of the business. Whereby now I'm in a network, I'm in several networking groups, I have a support system. You know what I mean? I don't have all the answers, but somebody in the group does. I'm a member of the chamber. Somebody in that chamber has that answer to that question that I have. So we can't go it alone. But again, we have to, when we talk about mentoring young people, we've got to give them a direction. We've got to give them a rationale. It's just like leading back up to the insurance thing now. Okay? Mm-hmm. I'm in insurance, but I don't even consider myself a salesperson in insurance. I consider myself an educator because I think the industry has changed so much. It's still changing. You look at healthcare. Healthcare is tremendous. It changes almost on a daily basis. It's about to change tremendously again. How do we keep up with it? The legalese. I tell you, I was being recertified this past few months, and I tell you what, it had more acronyms with the health. I worked at NASA. They had more acronyms than NASA had pertaining to the space shuttle. As far as things to do, but. Insurance is so vital today. I mean, and what is insurance? Insurance is basically transferring the risk from you to another entity, okay? For years, a lot of people had the typical insurance, term or a whole life, okay? Term meaning, anywhere from 10, 20, 30 years, you insure yourself. There was no cash value or anything like that built up. If you died within that period of time, they would pay your offsprings or your beneficiary a certain amount of money. Whole life basically was simply enough. It accumulated cash value to it along with the insurance benefit. But what they have today, and a lot of people have to look into it, is insurance that has living benefits, meaning that you yourself, you're insured, that in case anything happens, you pass away, there is a certain amount of money there for your spouse or your dependents to take care of the household, to take care of them, because now your income is gone. But also attached with those policies now are living benefits whereby you can borrow from it. Okay, if you become critically ill, they can give you a portion of the face value of that insurance. Very critical. For years, people like Aflac and other companies have sold critical, terminal, those insurance for those kind of purposes. Now you have insurance policies that these things are incorporated in, if you understand what I mean.
I do.
You know what I mean? You got a $200,000 policy, you become critically ill or terminally ill or whatever, you can get $150,000 to help you with your treatment, or if it's terminal and you wanted to go to Paris, you got the money to do that now, or settle some things in your life before you leave. So those are kind of things that is so important, but that's the new insurance. And you can't be so old school that you can't listen to these, Even if you got insurance anyways, you should be counseled or reviewed almost on a yearly basis, so to speak, you know what I mean? To see if everything is still intact. You got people out there thinking they have insurance because they bought term life over 30 years ago. It expired, okay? Are you still in force? Now you're 60-something because you haven't kept up with it. It's not that you're uninsurable. Almost anybody can get insurance. It's the cost now. You're 65, okay? Mm-hmm. It's the cost of that insurance that you're going to get. And at this point, I'd be remiss if I don't even mention it. Whenever you get any kind of insurance or any kind of benefits, attached with that are normally beneficiaries. Meaning, if you leave, who is going to get these proceeds? It is so important, so important, and I can't stress this enough, for people to really review those things, the beneficiaries. Imagine that you're divorced now, okay? You've been divorced for the last 10 years. Mm-hmm. You've been working at this place for 20 years, but when you joined them 20 years ago, your husband was the beneficiary on that $200,000 life insurance policy. When you got divorced, did you go and change the beneficiary, or is he still on there? You guys ain't talking. Okay? But if he is still on there, legally, he is going to get that. You know what I mean? It's the same thing with somebody's already gone or whatever, you know? So what I'm trying to say to you now is you've got to update it. Your financial situation has to be updated almost on a yearly basis. We're living in that kind of society right now. Okay?
We got to be, basically what you're saying, we got to be proactive.
We got to be very proactive. You know, it's just like I talked about the Legal Shield product the last time we spoke, and the will situation, you know, making sure that a will is in place for you. But I must tell you that a beneficiary clause trumps the will. What you got listed on that insurance document as the beneficiary trumps whatever you have on the will also. So the beneficiary statement on any kind of policy is so vitally important.
That's good. What's the difference when you talk about life insurance term from whole life insurance, as far as the difference of...
Well, the big difference being term life insurance basically is it's just insurance. It's basically insurance. You're paying on a monthly basis. It's a little bit cheaper than the whole life, but you're paying to cover you in case something happens. They pay out a benefit. Whole life, on the other hand, now gives you the ability to have a insurance instrument that not only insures you, but also it's a certain amount. It's almost like a savings account. Some people have the opinion that it's not the best form of savings, but it does while you're paying, it accumulates a cash value, savings, so to speak, that you can either draw out or borrow against. Okay, those are the big difference. But the other, there's other instruments that are out there now, like a index universal life insurance. There's a tremendous amount of instruments that are out there right now that one could get involved with. Some of them quite complex, And one of the mistakes that I think a lot of people are making today is, even though technology has evolved, is to go ahead and get some stuff over the internet. It's cheaper for me to go ahead and get the internet. Well, it's convenient, but I must say to you as an agent, you need somebody, and shop around, yes, but you need someone to sit across from you, press palms. You want to know who that guy is, okay? Have him explain what he's doing, how long he's been in the business, what is his expertise, and have him explain to you what he's offering. You really can't do that too much over the net, so to speak. Some of them had the chat room and all those kind of things, but that's a little bit impersonal. I want to see the guy. I'm old school. I want to look in your eyes and press your palms and see what you got to offer. And there's enough agents in the field in your area to do that with, and who you do business with, person that you like and trust. And how could you do that over the net? So that's just my opinion.
So would you also share with someone the different types that they need, like based on their age, or, if someone is 40 versus someone who's 60,
right?
Will you still go over them, different types?
You almost have to. I get to call people that knows that I'm in the business now. They call me and John, so how much is it going to cost? Well, it's not that, cut and dry. You have to sit down. It has to be an interview, okay? Your health, your age, sometimes the makeup of your household. How many is in the household? Your driving record, believe it or not. Okay. Some insurance companies now is even doing your credit record. Okay. So there's quite a few variables that are involved with a policy and a premium cost that has to be reviewed. You know what I mean? And like I said, I'm trying to do a business whereby it's interactive. Okay. It's not just selling insurance. It's not just selling legal plan, but I hope to become a consultant with a person that I can advise them. If you buy an insurance, one of the questions I'm going to have for you is, do you have a will in place? Where's it going? And, things of this nature, and just talk in general, because I'm out there, I'm getting as much knowledge as I possibly can. And I possibly want, I'm a little bit more educated than you are when it comes to that. So I'm going to pour out in you as a customer or as a client or whatever, the knowledge that I have, Those are, and I'm sure there's a lot of agents out there that have that same intent. So sitting down with an agent at least once a year, I think it's so important.
So is it good to have both will and insurance, or
yes.
Is it just to have the insurance part?
Well, when you say will and insurance, insurance that's monies. The will guarantees, or the will and the beneficiary part of the will kind of guides where it goes. The will is an instrument that tells where some other thing goes. You may have some china, you may have a gold collection or a silver or a coin collection. Mm-hmm. Where does that go? Whereby the insurance policy wouldn't cover those things. The insurance policy would basically cover just what has been paid in there, or the face value, the cash value and the face value of that account. Okay, mm-hmm. But in a will, you would still list that insurance also.
Oh, that's good.
You understand
that's
what I'm saying?
Good. Yeah.
Right.
That's
you would
good
stay, in the will, because sometimes you have some certain families that are not transparent. You may have gotten out a policy or whatever, but you didn't tell anybody that, hey, listen, there's a $200,000 policy that's out there, and you're one of the beneficiaries. It's not 100% you, 50% is yours, and 50% is for John. Mm-hmm. But in fact, what happens if I didn't tell you that there was a policy? Now I got to go and look for it. It's in a safety deposit box. Did you tell me where the key is? And the insurance company, yes, they're going to get a death certificate. They're not going to, John, we over here, we got $200,000 for you. There's a process. And the longer they keep the money in their account, it accumulates. Eventually, if you present an evidence to them that, hey, listen, Dad died and he had a policy with you, well, they have to pay up at that point. But they're not volunteering that information.
Well, I think it's very important, vital information that you said, to have both will and right. insurance, and also to put the insurance on a will.
On a will,
I've never heard anyone say, oh, put your insurance on a will.
Oh, yeah.
They always ask who's the beneficiary, or put everything that you want to give, or whoever it be. But this is the first time we ever hear anybody say, put your insurance on your will.
Because, again, think about it. If and I think one of the biggest problems, again, and I say that only because I know a lot of family are not transparent. Mm-hmm. They're not transparent as far as what's out there. There are some, but by and large, particularly in my community, they're really not. They're not really transparent. So, like I said, somebody might die, and you don't even know. You suspect that they may have. But what's wrong with saying, hey, listen, I do have a $200,000 policy. Your name as one of the beneficiaries. Here's where it's at and all that. Upon my death or whatever, this is where you can find it and all that. But you'd be surprised at how many people keep it a secret, or they forgot. Another thing that I've got to expand on here, because I do also employees benefits. I go out and I work for Gallagher Company, and I go out in the fourth quarter and we sign up large companies, schools, hospitals, and things of this nature. Insurance policies that are paid for by a company. Mm-hmm. You may work for XYZ company, and yes, you may have $50,000, $100,000 policy with the company. Just know that when you leave, that policy does not leave with you. So just think of the scenario that you're with a company for 30 years, okay? Mm-hmm. And you may have a $200,000, $300,000 policy with that company being paid for by that company. When you leave at 60 or when you leave at 50, it does not go with you. Or it can go with you, but it's going to go with you at that age that you leave.
Right.
So even though you have a certain amount of insurance within a company, I would still encourage you to get something for yourself. You are the payee of that company, of that insurance policy. You understand what I'm saying?
Yeah,
because that's a big mistake a lot of people make in that, well, I got insurance. After you retire, that insurance, like I said, by and large, really does not go with you. So now you have to start over from scratch at that age. And the premiums of insurance is based on, one of the things that it's based on is your age. The younger you have, the better it is. Another thing that I would encourage a lot of young couples that are starting out, you have a young, newborn or whatever, get an insurance policy. It's cheap. And the rate stays there. You talk about a savings, and like I said, there's so many instruments that are out there now. They have a thing out there now called $1 Million Baby, whereby you start, an account for your child or your grandchild. A grandparent can take it out. And by the time that they're ready for college, instead of going out and getting a student loan, they have the money for college because you've accumulated it over that period of time.